I was good, Jits. Today, man, we're on day 15th of the Smart Money Academy, and sorry about that. And this lesson is risk management, and it's honestly probably the most important aspect of all your trading. You could have the best strategy in the game if your mind or if your risk management isn't up to par with it, you're not gonna be going anywhere, okay? So it's about really being smart, okay? So here, you guys can't see. I'm gonna show you guys very quickly, okay? Here. This is a 1 to 2R. Okay, so really quickly, you're going to explain what R is. So RR is risk to reward. So if I say this trade is a 2R, okay, it means it's a 2 risk to reward trade, which means here at 198, we're supposed to say 2, which means if I'm risking $100, my TP should be $200. Okay, so no, oh, sorry about that. That's my fault. Now that you guys understand what R means, for the rest of the video, I'm going to be probably saying it a lot. So there you go. So risk to reward. Okay, I'm risking $1 to make two is a 2 RR. If you have a 5 RR, then you're risking 1 to make 5. Okay. Now here's the thing about RRs. A lot of these goddamn influencers are going to be preaching 1 to 3s and 1 to 4s and you get in your head. I know I've been there at the start of my trading journey 2, 3, 4 years ago. 3 years ago now. Well, I started 5 years ago, but 3 years ago was when I really got really into it. So, and they're gonna tell you, okay, so your stop is here. You need a 1 to 3, 1 to 4. But here's the truth about it, okay? I personally have a 65 to 70% win rate. Sometimes more than that, to be honest. Right now, with the challenge that I'm doing personally right now, I have like a 90% win rate. But and I have like a 1.3, 1.4 R average. But here's the thing, guys. If you have a 1-to-1 risk to reward ratio per trade, you only need like 60% win rate to be profitable. You don't need these 1 to 4 and 1 to 5s and 1 to a million to hit. You just need the 1 to 1.5, 1 to 2 with like a 50 to 60% win rate, and you're fucking golden. Okay? So get that out of your head that you need a 1 to 10, a 1 to top tick, bottom tick, whatever. No. You need to understand the fundamentals and you need to work on your risk management when you're actually in the trade because getting in the trade isn't the hard part. So what I'm trying to say is you'd rather have consistency over home runs, okay? If you can pull these numbers consistently enough, you're going to be profitable. You're going to make money in the long run. All right. So I just pulled up a little thing that I want you guys to take a look at, okay? Very quickly here. You can have a 40% win rate with a 2 to 1 and be profitable. You could have a 30% win rate with a 3 to 1 to be profitable, which is good, but here's the kicker, guys. You could have a 1 to 1 or a 1 to 1.5 or whatever and be profitable with 50 to 60%. They usually say, "Oh, you just need 20% win rate with a 5 to 1." Yeah, but your 5 to 1 is hard to hit. And it's hard to not take partials along the way, and it's hard to not get stopped at break even, and it's hard to, there's a bunch of different things. I personally prefer staying in between. I don't know if this is gonna work. Damn it. In between these two here, okay? And in between here. And you know what? Sometimes, like for the challenge right now, it goes even better and you have a 90% win rate and you make money like crazy. So crazy how shit works out sometimes, guys. But what I'm really trying to show you guys here is that you don't need home runs every trade. You don't need to post it on every single channel that you hit a 1 to 13, right? Even though you a lot of these influencers that post 1 to 10s, 1 to 5s, even 1 to 5s, 1 to 10s, 1 to 15, 1 to 5s, whatever, RR. You know how many trades they took before getting that home run that they missed or they lost, and then they get that one good trade and they're still unprofitable and they're still not making money and they're like, "Hey, I hit a 1 to 15, guys," and they sell a course. I do everything to show you guys for free, so like, and it's not the 1 to 15s that are gonna get you profitable, trust me. Okay, 1 to 2s, sure. 1 to 3, good fucking trade for 1 to, if you get a 1 to 3. You get a 1 to 4, 1 to 5, that's really good. But 1 to 1.5 is fine too, okay? 1 to 1.3 is my minimum for me personally. If I don't have at least a 1.3, I don't even get in the trade. It's not worth. Because I'll explain it to you guys very quickly, that too. I think it's important to go over. Let me go back here. If you have a 1 to 1.3, this is what it looks like, okay? But let's say I was to just pull over on this leg here. If I am to enter here with this on OTE, let's say, or like EQ, with a 1 to 1.3, your stop is perfect on EQ, sorry. It's well, it's almost perfect. We understand. Like it's close enough where you can be pretty good with that, okay? So 1.3 is really the minimum that I'm gonna go. So now I'm gonna try to speed this up a little bit, okay, guys? It's important to understand that you also need to calculate your risk per trade, and a lot of these traders are gonna say go with a fixed lot size, but I don't think that's true either because your SL is gonna move depending on the trade, right? Like there's a day that's gonna move more. You're gonna want your SL here, maybe here, whatever, but it's gonna move. So your lot size should move. What I typically do is I risk a percentage of my account, usually between 1 to 3%. More likely 1%. Sometimes 2% if I'm in a A plus setup, it's looking really good and I want to re-add to a position. But we're gonna get into that later. But usually a starter position is 1%. On certain days, we're gonna get into that later too. I go 0.5% risk on the trade. Okay, so I de-risk myself even more. That being said, let's explain really quick why that's the case. It's because again, you want consistency over home runs, okay? So you want your account to balance to go up. You want to compound those gains. And how do you do that? By being consistently profitable. And how you do that? 1.3, 1.5, 2 RR trade, 1, 2% risk, and you're going to see your account's going to grow, okay? So what I usually do is I use this. Okay, so you go here, enter your account size, your risk, whatever you want. Right now it's at 23% simply because of the challenge I was doing. Um, but on my main account, my actual account where I really want to make money, I risk 1 to 2% to 3%. Even 0.5. Oh, I already went over this. You guys understand. So you enter the site, you enter the lot, you enter your risk, and then bang. When I go create an order, I'll have to be connected. It's gonna tell me exactly how much I make, how much I lose, what I want to do. If I want to drag it, if I want to do whatever I want, I can do it. Now, once you're in a trade, it's important to also manage your trade. So let's say I enter here and I'm in this trade here, okay? Right? I enter here at this pullback. I'm just spitballing here, okay? So I'm in here. Once the trade breaks this here, I can bring stop to break even. That's a way of risk management. Once it breaks above, maybe it hits my TP, I can take 50% profit off, put stop in profit. It hits a second take profit here. Takes another 50% off. So now you have 75% off, right? Put stop maybe at this high here. It's a way, risk management is about managing your trade while you're in them, okay? And I think it's important to that you're gonna learn with market experience, but not move your stop too early. Go BE. I usually go BE not as soon as I can, but like as soon as it makes sense, which is when I get displacement out and the market should not come back. Once your idea is invalidated and your trade idea is invalidated, you need to get out of this trade. Sometimes the market is gonna go like this, and then it's gonna go like this, and then it's gonna go like this, and then it's gonna go like this. Okay? I'll give you guys an example. Let's say you went long here. Okay? You went long here, and your stop was here, and now you're here. Once the market does this move here, this super bearish move, let's say it hits your TP here and you took profits, why are you staying in this trade even if your stop is BE when you see this move? You know this means reversal. You understand this concept. You could wait for a slight pullback and try to sell around here. I can't find the fucking thing. And try to sell around here. But why would you wait for it to hit your BE? Just get out of the trade. You already made your money. You're good. Like manage your trades intelligently, guys. It's fine. You can leave some if you want. You could take another portion out and leave some for profit. But what I'm saying is don't get too attached of the idea of TP or SL. You can manage your trade as you go and it's still fine. Okay? What they mean by TP or SL is that they don't want you having emotion and taking trades out early. If your trade didn't hit TP, it's a little more sketch. Maybe if you're not sure if your trade is gonna hit TP, just go BE. But I wouldn't take it out because sometimes you're just leaving profit on the table, right? Um, Also, you need to be able to I hope you guys are writing this down. This is a big episode. Um, I need you guys to be able to adjust your position size. So on Mondays with no news, I de-risk. That's the day I risk 0.5%. I live trade every morning. You can go check it. I talk about it every Monday. On days where the action seems very improbable, I also de-risk myself 0.5%. And on days where we took my daily drawn liquidity. So let's say I come into the market, let's say the same chart here, right? And I say this green line here is my drawn liquidity for today. If it's taken and I didn't take a trade and I see another opportunity to take a trade, I de-risk myself because my daily drawn liquidity has been taken. Okay? If that doesn't make sense to anybody, just put a comment down below. I'll answer it lickety split. All right, now let's get into if the trade, like here, let's say you're in this trade here, you entered here, and your stop was here, and your TP's here. You see the trade is going really good. You still have one or two contracts in it, and you see this opportunity right here. Don't be shy to add to your position and add again, like to take another trade on top of your trade type of thing. And sometimes it's even going to give you the opportunity here where you see the displacement, you see that your trade is getting good, you had an early entry, you can enter again with the same target. And it's going to move your average entry up and you're going to be double sized in, but that's fine. That's how if you're confident in your trade, you should always invest or put the money in the trades you're confident and the trades you're not 100% confident in. For honestly, you shouldn't even trade or you should de-risk yourself heavily. Again, I'm going to go with the Monday. On Mondays, I either don't trade or I de-risk. I will never ever take a full risk trade unless it's the Monday of NFP week because according to my back testing and my journal, those days I do really well. So the Monday of NFP week, so when it's NFP Friday on the Friday, that Monday is usually decent for me. The other 3 Monday of the month, forget about it. I'm either not trading, I'll always be live or checking the market, but I'm not taking a trade, I'm sitting on my hands, or I'm heavily de-risking myself. It's also important to always have a hard SL. Um, Sometimes people like, or like even me sometimes, I like to say, okay, if this fair value gap here gets inverted, I'm gonna get out, but I don't want to get wicked out, okay? Which means the wick goes, fills your stop, and then it rips. So you don't want to have a hard stop. So what I'll do is I put my hard stop lower, like here, in case the market decides to dip 5% and you don't want to blow your account, okay? So you put your stop here, but your real stop is here. If it inverts this fair value gap, you just manually exit the trade. Your stop here is if market decides to do some crazy shit and it decides to dip instantly, like we've seen it happen. So I always put a hard stop lower, and then the second we break out, I'll move it straight to where I wanted it to be, and I'll close the trade manually if I need when it invalidates my trade idea once again. Okay. Also, never move your SL backwards. Where your SL is where it should be. If your trade's invalidated, just you can always try again. It's always tomorrow. It's always another day. Never extend your losses and never cut your profits short. Okay, you want to extend your winners and you want to shorten your cuts or your losses. All right. So again, don't be hoping. You guys need to be trading. Okay, you're not hoping the market reverses. You know the market is going to go up. If you get invalidated, you get invalidated. Maybe you need to reevaluate your drawn liquidity. Maybe you need to reevaluate your entry. Maybe you need to reevaluate the way you look at the charts, but there's something that needs reevaluating there, okay? Or maybe the market's just not in good conditions. That happens too. That's fine, you know. But after a solid move, then move your stop where you want it. And then if you get a really solid move, like let's say here, like at this point here, I would be BE, like pretty heavily if this was my trade, you know? Like once we break this high retest and then we get this candle here, I'm definitely BE. Realistically, I'm probably BE right here, to be honest. But you know, it's important to manage your trade as you go. I'm gonna do a recap at the end of the video if you guys are a little scared of all the information I'm throwing at you. So and you guys need to understand that 1 to 2% compounding over time is huge. So if you make 2 or 1% every day, at the end, like I could pull out a calculator right now and I will actually. Compound calculator. Just to mess around, okay? So let's say you start with $1,000 and this is not what I want. Okay, so let's say you start with $1,000 and you trade for let's say a month, okay? So actually, let's say a year. Let's say a year. Let's say 200 days. 200 days. I'm pretty sure that's around the amount of days in a year. and you gain 1% per day. Okay, on your winning days you gain 2%. On your losing days you lose 1%. You end up with 1% flat average per day. Okay, we'll even go 0.5. We'll go very, very tame. At the end of the year, you would have gained 180%. 180% of your account is huge. Okay, it's absolutely ridiculous. You put in an S&P 500 and you get 10% a year. All right, so stop thinking that 1 to 2% won't get you anywhere. So I already talked about Mondays that I'm de-risking, but I want you guys to understand why I'm de-risking is because Monday usually doesn't have a whole lot of liquidity, and it's a day to position yourself for the week. So it's gonna tell you what the week's gonna do. So it's creating liquidity pools. It's showing you your EQ levels. It's building your weekly narrative. It's showing you where the market most likely will probably want to go. So on Mondays, and you have the itch to take a trade on Mondays usually because of the weekend. I don't have that anymore, but I remember in the beginning I used to have it heavy, so there's usually traps and false moves and manipulation a lot, and it's just a low probability day. So again, don't trade it, sit on hands, watch the chart, and take a very, very small positions trade if you guys end up seeing something that you like. So in conclusion, trading isn't about winning every trade. It's about knowing how to lose and lose properly. And when you win way bigger than you lose, or you win more often than you lose, but you have to be able to average it out, right? So proper risk management lets you survive, okay, in this market. If the market conditions are bad, don't go risking 2 to 3% per trade. 1 to 0.5%. Capital preservation is super important in this market. It's super important in life in general, okay? So capitalize on the good ones and survive in the bad ones, okay? That's all it is. You have to play the long game here. No full porting, no over leveraging, no fear of missing out, no taking off early. Very, very, very important, okay? So all in all, okay, we talked about RR. What's RR? It's risk to reward. 1 to 2, 1 to 1.5 to 2 is fine. You could go higher than that, but I think it's fine. Don't forget to manage your positions properly in the trade. Go back in the video if you guys aren't sure of what to say, right? What I wrote down. If the setup is an A plus or A or like even B plus, de-risk. If the setup is A plus plus, risk yourself accordingly and maybe you can enter another position. It's important to capitalize on your winners and cut your losers short. Okay, guys? On that note, if you guys have any questions at all, you can write me. You can join the Discord. I have a Discord for free who you guys can ask any questions. I'm going to end up probably trading live there someday too. Right now, I trade live on Twitch every morning. I'm doing the $100 to $50,000 challenge, so come watch me. And subscribe to the YouTube, ring the bell to be notified when I post. And yeah, go check me out on TikTok and Instagram, and I'll catch you guys in the next one. Peace.